This is the Daily Market Rundown live from the Tradelo trading floor. It's July the 10th. Some highlights from today's show. European equities hit record highs. The Fed is not going to cut until September. And Bitcoin is ready for record highs. Good day traders and welcome. It's a Thursday. Let's get stuck straight into it. So a number of things going on overnight. Again, we're seeing a lot of noise out in terms of the tariff situation. It's a lot of these sort of escalatory type tariffs. But again, markets shrugging it off because we know the playbook right now. It's, threaten with high tariffs, get some concessions. Ultimately, the implied marginal rate of tariffs will be lower come 1 month from now, come 3 months from now, come 6 months from now. That's the general playbook. That's the way the market's seeing it. That's why it's being shrugged off. But there is one key catalyst today, one key thing to pay very, very close attention to. And it is perhaps the thing that is driving equities to record high territory. And it's got to do with the EU. We've heard a lot of positive noise out of the EU as well as the US over the last couple of sessions. This idea that they are very close to a deal in theory, and that the deal would imply a 10% tariff on EU goods. Now, that's kind of a head scratcher because if we go back to the retaliatory tariffs received back in April, the EU was set to get 20% tariffs because of the significant trade surplus. But for some reason, it seems like they're going to get the 10%. But I expect the US is going to want some significant concessions out of the EU, and we're just not quite sure what those concessions are. Now, we know that the President Trump came out 2 days ago and he told us the EU is going to get a letter any day now, and he mentioned 2 days. So today is very, very important, and I think the markets are leaning on this idea that nothing can go wrong and that the EU will get a very positive deal in theory. However, therein lies the key trade for today. Should they not get that deal? Should they receive a letter with retaliatory threats of 20%? What it does tell us is that all we've heard for the last couple of days is just a lot of talk, and ultimately the markets will stage a little bit of fright. However, should they get a deal? Should the EU and the US agree in terms to get a 10% deal, that would be significantly positive, and we'll tell you why. It's got to do with the fact that if the EU, with a big trade surplus, which is the US's biggest trade partner, can get 10%, it means everyone ultimately can get that 10%, so long as they come to the table, they give away those concessions. That's the key takeaway. That's what the market wants to find out about. Does the EU get it? Yes, very positive. We rally for the next couple of weeks. If they don't get it, if the threat comes, if the letter comes, it's the opposite. We will see a little bit of a fright for the markets because they are now pricing in, ultimately, the nothing can go wrong scenario. Now, let's get into it. Let's talk a little bit about, of course, the fact that European stocks rise to record highs. Now, we've got to be careful. I think a lot of the newspapers are talking about FTSE 100 rising to record highs. I think you kind of have to shrug that off because it's very heavily resource driven. And we know, of course, that pretty much all resources and commodities are driving higher as a result of the tariffs. However, we see it in the DAX as well. Okay, DAX is at record highs. Not only is DAX at record highs, but it is now outperforming, as I will show you in a minute when we get to the rebasing chart. But the key takeaway is that the market is now pricing in that the EU is going to get that 10% baseline deal. It's a lot better than a 20% threat that was given to them on April. And should that be the case, like I said, we are going to see some continued outperformance in Europe versus the US, but also just sentiment in general will stay very, very positive. Okay. I keep saying this, but there's very few things that can derail the equity rally right now. Okay, there's very few risks on the horizon other than a recession, and none of the hard data suggests that we are going to get a recession anytime soon. Okay, now, yes, there are some warning signs, and we saw that from the likes of Amazon. Okay, they are seeing quite a drop off in demand for their Prime Day sales, but ultimately, again, this is not an economy that seems to be in any form of a recession. Okay, yes, perhaps less demand, and we'll find out what that means in the next couple of months. But right now, we have to trade what's in front of us, which is a pretty good economy, fine, somewhat slower than expected growth, but ultimately an economy that's about to see a very, very big injection of liquidity via the Trump surplus government spending. Okay, now with that in mind, what we can see in terms of the index, there you have it on screen. You can really see in terms of not just today, but if we look at the week, we can see DAX up 3 and a bit, CAC on up 3 and a bit, FTSE up 2.8. If we compare that to the US week to date, you can see S&P pretty much flat, Nasdaq flat, Russell flat. Okay, so that outperformance is starting to come into Europe, and that is because of this one beautiful deal that seems to be over the line. We see Ursula von der Leyen come out and say, look, we are working non-stop to reach a low tariff, that's the 10%. Okay, that's what they want. Ultimately, the question is Trump going to give it to them? And what has the EU agreed to give the US for the president to be so generous and give them 10%? So again, the sort of the key here is, has the news flow been kind of getting everyone aggressively long at the wrong time? We just need to find out. Okay, I suspect there's more to this than what we can see on screen, and that's why I think you have to be very, very switched on today for if President Trump does send a letter, because that is ultimately going to tell us that a lot of the stuff we've heard over the last couple of days and weeks is just hot air. Okay, it means that he is going to force the EU to give up a lot more than what they think. Okay, now with that in mind, there is the DAX. You can see we've broken up into record highs. What I will say is the 200-day moving average is a long way down the page. Now that doesn't mean we sell it, it doesn't mean it's overbought, it just means that the market has moved a significant amount. It is breaking out from overbought conditions, which again doesn't necessarily suggest we can't go higher, it just means that the way we're going to go higher is perhaps going to be far less aggressive than if we weren't overbought. Okay, so think more of a grindy kind of price action at these record highs, a lot of two-way trade as opposed to sort of, a typical trending move into record territory. Okay, with that in mind, we also had the Fed minutes come out. Now, again, of course, this is dated. The meeting was, 2-3 weeks ago. And ultimately, I think the key takeaways is there's a massive divide in the Fed. We've got two participants now that we know are actually calling for a cut as soon as the July meeting. Most participants think there will be a cut this year. I think that's the consensus. There will be at least a cut this year. But the general thinking, and I think this is quite interesting, most policymakers are concerned about inflation becoming embedded. And I think that really does matter. Okay, because again, the concern and why they're holding off or why they want to wait for more information is that if the tariff situation is going to create inflation that's embedded, there are going to be long-term implications for that. Okay, and the reality is that it does mean that Fed will not be in a position to cut at all this year. And ultimately, so long as inflation is hot, so long as those inflation expectations are embedded, it's not likely we are going to get cuts perhaps ever. Okay, don't forget there is obviously a situation where if inflation comes in higher, of course, then wage growth comes in higher, and then at some point we just sort of accept 2.5 to 3% inflation. Okay, now in that environment, it doesn't enable the Fed to cut rates, and should they cut rates, they'll ultimately just ignite further demand and of course increased inflation. Okay, now the key takeaway, of course, and this is the important chart, if we look at the rates, I think something interesting is happening here, and it's exactly what I'm spelling out for you. If we look at the DEC contract, which is in white, what you can see ultimately is that since the start of this month, the market's starting to push effectively an additional, call it, cut into next year and take it not necessarily out of this year, but what we can see since May is that the rate cut expectations for this year have moved somewhat sideways. Okay, it's this idea of 1 to 2 cuts, which is generally the consensus on Wall Street as well as via the Fed dot plot. But what we can start to see is that at the same time as they're maintaining this idea of 1, perhaps 2 cuts, they're starting to push in further cuts into next year. Now that would make sense because it's this sort of kicking the can down the road, which is to say, well, look, maybe inflation will come via tariffs. It'll be a short-term thing, a one-and-done kind of thing, and ultimately it'll enable the Fed to cut a little bit more next year. Now, we need to keep a close eye on this because what I expect could happen should inflation hot up, as now is being priced and expected by the market, we could actually start to see the DEC this year contract start to move a little bit higher, perhaps pricing only 1 cut this year, but maintain this idea of more cuts next year. Okay, keep an eye on the rates curve. I think that's going to be interesting to watch, particularly over the inflation data that we get out next week. Now, with that in mind, like I said, what is interesting is if we look at the rebasing charts since the start of this month, notice how the DAX has now started to lead again. Okay, for some period of time from May, of course, there was concerns around the 90-day tariff situation, and what we could see during that time, so if I just bracket this for you, okay, what we could see during that time was the DAX went sideways to down, So it underperformed versus its US peers. Okay, there was some concern with regards to the tariff situation, but since the start of this month, since Mr. Trump has come out and effectively just said, look, we'll keep giving extensions, the 90-day didn't really matter that much. All of a sudden now, what that points to is a situation where Europe's effective tax rate is going to be lower than the 20% threat, and that's music to the ears of European equity indices. Okay, that's why we are now seeing the DAX start to outperform again. It's starting to lead to the upside, and ultimately that is one to watch. Okay, it's again that continuation of what we got earlier this year, which was buy Europe versus sell the US. So don't be surprised if you come in over the next couple of days to see sort of DAX grinding its way into record territory, as it is going to lead to the upside. Okay, now with that in mind, what that means, all this positivity around the world, all this positivity around nothing can go wrong, it does mean that, of course, money is going to start to chase. Okay, if investors don't want to buy the likes of DAX because it's overbought, and they don't want to buy the likes of some of the tech names, money is going to start to flow into the more speculative stuff, including cryptocurrencies. Okay, and that's where the attention goes to now. I think this has been a lagger for some period of time. We know that ultimately Bitcoin is only up this year around 18%, and Ethereum is down 17%. So it's been relatively well behaved. Now, if I just go back one slide, okay, if we compare Bitcoin to DAX, DAX is up 23%. Okay, we can see that the Nasdaq's up 8%, and if we compare them and adjust them for vol, Nasdaq up 8% with Bitcoin up only 18%, does suggest that cryptocurrencies in general are lagging somewhat this year. Okay, now that doesn't mean they won't continue to lag, but just having a look at what's happened over the last couple of days in terms of price action, in terms of what's going on in the world, it does look like Bitcoin is staging itself for that next move higher into record territory. What is interesting is if we look at Bitcoin in comparison, of course, to some of the equity indices, it's not as overbought. Okay, in other words, it's been moving sideways for some period of time. If we look at all the moving averages, it is actually preparing itself from a technical perspective for a pretty decent breakout. Okay, remember what I said too, in terms of how DAX will break to the upside, it's probably going to be a lot more slower and grindy. Why? Because that 200 moving average is so far away. You go look at Bitcoin, it's very, very different. Okay, Bitcoin, in terms of its technical moving averages, does suggest that we could have a pretty decent breakout. And again, I'm not talking about rallying to 1 million in a couple of days. I'm talking about we should be able to move our way to 120 and perhaps a little bit higher than 120 in a relatively short space of time. Okay, don't be surprised to see 120,000 trade effectively before the month is out. Now, with that in mind, what sort of gives us that confidence is not only did we break that trend channel, not only did we consolidate outside of that breakout, importantly, if you look at yesterday in particular, the volumes speak volumes ultimately for what's coming. Okay, we had a very, very high volume breakout. It did look like some stops went off, but interestingly, even though some stops went off, it has held that very aggressive move. It's not retraced it. It's sort of really struggled to retrace any of that stop run from yesterday. And so what I do expect once that US traders come online, I do expect us to test in yesterday's highs and then of course extend beyond it. Okay, it is a day to trade crypto. It is a day to trade all the crypto. What is interesting is Ethereum is leading to the upside, so keep a close eye on Ethereum. It has already taken out yesterday's highs. I do expect once the US comes online, ultimately we will see crypto lead and start to move to the upside. Okay. With that in mind, our other play of the day is very much the S&P 500. Like I said, it's flat for the week. It's done nothing for the week. It's pretty much been a boring week. DAX leading to the upside. I do expect S&P is going to go in and trade last week's highs. What gives us that confidence? Well, we got two profiles here. We got last week's profile on the left and we got this week's profile on the right. We call this a very, very tight range, a very tight consolidation range. But what is interesting, that was Monday's low, Tuesday's low, Wednesday's low. Effectively, we're making a series of higher lows. In other words, I don't want to say support, but the market is becoming less inclined to want to sell the downtick, and effectively, we are seeing, again, people, traders, perhaps buying higher and higher off the lows. Okay, we also have a ledge in and around that 63.10 area, 63.10. Keep an eye on that. I expect we get above that. We are going to trade up to this week's highs, which is that 63.33 area. So keep an eye on that. I think there's a good 20 to 25 points of break to retest last week's high. What do we do up there? Well, look, I think if you look at the implied moves for today, it is around 25 to 28 points from yesterday's close. So a move up to last week's highs is perhaps as good as it's going to get. Could we extend upon it? Yeah, sure, of course we can. But again, we have to play the high probability plays. We have to take the meat of the move. And so I think that is the play of the day. Just look for a run onto those 63.33s. Take your profits there. Go and enjoy a summer day. That is kind of the key play for today. In terms of the data front, we have got, of course, just two things to pay attention to. It's the initial jobless. That has been getting some attention. But again, given how strong the non-farm payrolls was, again, it's not to say we don't get a shock number. Keep an eye on it, okay? Just keep an eye on that initial jobless. And then finally, we do have a 30-year US auction out later today. Again, not something that should be scaring anyone because the auctions have been extremely solid for the last 2 months. But again, if we did get a hung auction, if we did get a big tail, who knows, okay? There are lots of things can happen. That's why we pay attention to it. Okay, if there are any other questions, of course, do post them in the Discord channel. Otherwise, good luck out there. Manage the risk. Go make some money.